Hello, everyone. I'm Sid Rajeev, Head of Research at Fundamental Research. And our guest today is Erik Anderson, CEO of Fiore Cannabis. We initiated coverage on Fiore last month. Fiore is a US MSO, also called multi-state operator, with cultivation and production operations in Nevada and a retail dispensary in California. They're expanding operations in Nevada now and also adding a grow operations in California near their retail dispensary. So the agenda for today is I'll kick off the call with our thoughts on the cannabis space, and Erik will take over from there and introduce us to his company and highlight some upcoming catalysts. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. We encourage questions to be directed to Fiore since we have Erik on the call today. Here are some key disclaimers. Please take a moment. Okay, so let's get started. FRC here, we have 5 reasons to be bullish on the cannabis sector. Number 1 is a growing optimism regarding the federal legalization of cannabis, especially after the Democrats took over the US government. In March this year, New York became the 17th state to legalize recreational cannabis. New York alone is a $5 billion industry, which has been added to the pie. We feel that this move by New York adds significant momentum for federal legalization. Now, as cannabis is still federally illegal in the US, we note that there's a significant valuation gap between US and Canadian cannabis companies. I'll talk about the valuation gap later after presenting the other 4 factors we believe will affect cannabis. The second reason why we're bullish on cannabis is increasing sales of legal cannabis and declining illegal sales. The chart here shows Canadian sales at the end of 2020. 56% of the sales in Canada were legal, up from 50% in the prior quarter in Q3. Now, California, the world's largest cannabis market, is expected to see its legal sales more than double in the next 5 years. As you can see here, illegal sales is expected to decline by 25% in the next 5 years. The third reason is growing demand for cannabis 2.0 products. And these 2.0 products includes edibles, beverages, topicals, extracts, and similar products. The chart here shows Canadian sales projections. You can see the significant growth projections for 2.0, such as oils, edibles, and vapes. Our fourth point is increasing cannabis retail stores in Canada. As shown here, Canada's store count has been increasing every week. This table shows population per store count by province. You can see that Ontario is at 19,000, Quebec is at 125,000, BC is at 15,000, that is 15,000 people per store. This compares to Colorado's 7,000. Colorado is a mature market in the US, and we expect store counts in Canada to increase to levels seen in mature markets. And with that, we believe there's room for another 1,500 new stores in Canada, up from the current 2,000 stores. My fifth point is that we expect to see consolidation in the space. Ultimately, cannabis is a commodity, and synergies can be captured by combining entities. We feel there's absolutely no need or reason to have hundreds of growers. We've already seen some multiple mergers and acquisitions in the past 6 months, and we expect this trend to continue. Okay, so let's look at the valuation gap between US and Canadian players. Canadian majors are trading at 120% premium over its US counterparts. And we believe this is primarily due to the fact that cannabis is yet to be federally legalized in the US. This chart here shows the valuation gap in the past 3 months. Although we are yet to see any shrinkage in premiums, we do expect a bump in valuation of US-based companies as the sector moves closer to legalization. And to conclude, we believe fundamentally solid US companies are likely to outperform its Canadian peers in the near term. With that, I would like to welcome Erik Anderson, CEO of Fiori Cannabis. Erik, you'll be able to share your screen in a second.
Great, thank you, Sid, and I hope everybody's well today. I'm just going to click over here and hopefully, Sid, can you confirm that you can see my PowerPoint presentation?
Perfect, Erik. Please go ahead.
Great, thanks. So thank you for the introduction, and I just want to sort of click into the meat and potatoes of our presentation here today. Sid did a very good job introducing Fiore. We are a U.S. multi-state operator. We are a Cannabis Cup winner with our cultivation and production facility in Las Vegas. We grow in no-till organic living soil, and we're one of the very few organic growers in the state. That allows us to capture higher margins and higher interest. I'm happy to report that because of this, and you know, with our reboot of the whole facility last year, we've already forward sold all of our crops into July. So the market demand for our organic product has been very strong. And similarly, over in California, where we have an award-winning dispensary focused on wellness and focused on all the reasons that people travel to Palm Springs and the Coachella Valley, revenues have really increased well for us. We've made the store profitable. And basically, that's what we're taking back to our investors and shareholders, is that we are generating revenue in Nevada and in California. And we've got some exciting growth plans that I'm going to walk you through here today, too, that represents our flower brand of Fiore, our concentrates brand Diamante. We've got a skincare line called Pure Cloud 9. We've actually got a couple of other products that we'll be launching here very, very shortly as well, too, in the Nevada market. As Sid said, the real reason I'm here, I was a veteran of the Canadian run-up to legalization in 2018. I was involved in the industry from 2013 to 2018. And I really saw what the market did as federal legalization was announced. We are targeting U.S. legislation relative to a couple of acts. There's the MORE Act, which is really the decriminalization and the expungement act. And this is something that works in concert with the Safe Banking Act, which has already, again, been put in front of the House of Representatives and passed here in 2021. And we feel that the Biden administration is going to essentially decriminalize at the federal level, allow the states through the States Act to continue to decide whether they'd like to legalize medically, whether they'd like to legalize recreationally and medically, or whether they would just, similar to some of the states, whether they would just like to stand back and see what's going to happen. So we think that the market's going to open up in terms of an institutional investment, in terms of the stock markets, and you'll see a lot of the US MSOs redomiciling or pulling off of the Canadian exchanges in favor of the NASDAQ and the New York Stock Exchange. And we really think that the investment is really going to kick in once these pieces of legislation go into play. We expect that to happen sometime between now and hopefully the fall, but we don't have a glass ball. We're just continuing to monitor things. But the entire reason that I'm here was to basically turn the company around to profitability, which we've done, and basically to allow the federal legalization efforts to allow for continued expansion of our business. We've got revenue generating operations right now in Nevada that, as everything comes online, which includes our cultivation, which includes our Diamante concentrates lab, we figure that the revenue potential just in that facility in Nevada is $10 million, and we've already turned it around. We're going to be reporting our Q1 numbers here very shortly. Happy to let everybody know that we're well ahead of our plan internally, and we're already off to profitability, which was a very fundamental thing that we wanted to communicate to the marketplace. As we look towards expansion, we're looking at what we call Apex Phase 2. You may have seen that we signed a partnership deal with Allied Corp. They have, right now we're growing in 10,000 square feet of cultivation in Nevada. We have 9,000 square feet of additional modular units that are already constructed in Las Vegas. They're being moved onto site. And we think in the next 4 to 6 months that we'll have an additional 9,000 square feet activated. We've signed a management agreement with Allied where we're basically going to operate those additional 9,000 square feet and double our already existing capacity. We are going to do a revenue share. So they take care of the cost inputs. We basically grow it, we sell it, and we split the proceeds 50-50. Really good deal for us. But over and above that, we've already articulated that we've got an additional 25,000 square feet that we've already got engineering plans on. We're talking to contractors. We're probably going to go out for about a $4.5 million raise. And we're going to grow from, again, 10,000 square feet plus 9 from Allied, so 19,000 plus another 25. So we're getting up to around that 45,000 square foot mark. And then as we raise that entire 4.5 million, we think that we can take all of Nevada on our 7 acres of land in Las Vegas to 80,000 square feet. This takes us from roughly a $10 million revenue potential in Nevada to a $50+ million revenue potential. And that includes the lab being running fully functional 24/7 with cross shifts. If we look at the total capital required to complete all of the expansion on our existing assets that we own, we look again at Desert Hot Springs or the Palm Springs, Coachella Valley. We've proven that our store can generate $10,000 per day, and we're going to raise a little bit of money that basically we're going to add an e-commerce site and we're going to add a delivery service. So we think that we can turn that store into a $3 million operation. And we're not pursuing other stores at this point in time, but we do think we're good operators. We do think that we can basically try to pick off some distressed assets, and I'll talk about that in a minute, because really what we fundamentally want to be perceived as in the US MSO space is a superior operator with a superior management team who's got experience in the space, and that we're always focused on profitability or on instant ROI for any type of money that we raise. When we look at the merger acquisition consolidation space that Sid referenced, we look at Las Vegas, and we think that for about another $3.5 million that we could purchase a dispensary, and that dispensary, that just the margins are so fantastic at the retail level in Las Vegas. A quick comparison: in Canada, you can go and buy an ounce of top grade A grade flower, and you'll probably pay somewhere between $150 and $200 an ounce in a retail store. In Las Vegas, that same Fiore top shelf A grade will sell for upwards of $400 to $500. So the margins are extremely good in Las Vegas. 42 million visitors via tourism every year, more people than live in Canada. And we think that Las Vegas is the best market in the world for cannabis. So we are targeting to become vertically integrated to buy a retail dispensary as well. When you combine the phase 2 expansion plus what we're doing with our store in the Coachella Valley, plus a store in Las Vegas, we think that we're now a $65 to $70 million operation annually. And then if you look at that further expansion into Nevada and California, we're not going to get too much further afield than that. We think, roughly for about another $4 million that we can find a grow in California that we can take over and rent and lease and operate, because that's what we do. We're superior operators. But we also have a couple of acres of land there too that we could go and build our own. So we're evaluating that right now. We don't know if we'd have to spend that $4 million, but we think that we can get a cultivation operational in the Coachella Valley. And we would basically take our 80,000 square feet of Nevada, combine it with about 40,000 square feet in California. We'd have a store in Nevada. We'd have a store in California. We'd be vertically integrated in both states, and we'd be a $100 million enterprise. So really, it's not going to take a lot to raise $8 to $12 million in terms of our capital expansion. Basically, what we want to do is within the next 24 months, we want to be vertically integrated in both states. We have a plan to do this. We have a plan to have an instant return on investment for the $8 to $12 million we're going to have to raise. And everything's going to be profitable growth, profitable, bottom line numbers. And that's what we want to take out to the market. If consolidation is going to happen, we hope to be a consolidator on a small scale in the short term. And we think that one of the larger US MSOs, or potentially even a Canadian licensed producer, would maybe want to come down post legalization into the US. And they potentially would look at Fiore as a great takeout target, because we'd be profitable. We'd have a cleaned up balance sheet, low debt profile, and basically be a craft cultivator and a superior operator at the retail level. I'll sort of turn it over again to some questions now. I wanted to be brief. I wanted to give you just a snapshot of where we're at, where we're headed. And Sid, do you want me to continue to share my screen, or would you like me to let this off?
Yeah, let it be there. Let's keep it there in case we have questions. You can just move around your deck. Yeah, thank you so much, Erik, for that. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in. Or if you would like to ask Erik directly, please click on the raise hand option and I can unmute you. So in the meantime, we have received a bunch of questions, Erik. Why don't we get going from there?
Absolutely.
First question, do you provide revenue guidance for the year?
Not for the year, no. We're trying to provide guidance as we look towards the end of a quarter, and we like to consider ourselves fully transparent with the market. So not for the year. We're going to try to do quarter-over-quarter guidance going forward.
Okay. Did the pandemic impact your retail stores? You mentioned you can do 3 million per year. What's the current revenue per store?
So the store in California remained open because it was deemed an essential service. Throughout the pandemic, from roughly March of 2020 to roughly July, August of 2020, we actually saw a 20% increase in revenues at the store. This was a popular trend both in Canada and the US for cannabis sales during the more aggressive outbreak of the pandemic. Happy to report that, when I took the role as CEO, the store was roughly doing around $100,000 a month. We've now proven that we can do north of $150,000 a month. So we're sort of approaching that $2 million annual mark. And we've had a few days, like I said, 420, I think that we did around $14,000 in revenue. And we think that by adding an e-commerce addition to our new website that's being developed right now, as well as delivery service, we think that we can take the store in California on a single store basis with delivery, with e-commerce. We think that we can take that to $3 million. So the pandemic actually helped us out.
Yeah, just to give some perspective to the listeners, we feel the average store revenue per store across US or Canada is about $1.5 million a year. So you're looking at a higher than average revenue per store for Fiore here. Do you plan to expand outside California and Nevada?
Not at this time. I won't say that we don't have conversations. We've looked at some things in Arizona. We've looked at some things in Colorado. We've looked at some things in New Jersey. But as of this time, we're going to stay focused on being a two-state, multi-state operator in California and in Nevada.
This is regarding stores again. You mentioned store acquisitions in Nevada. Do you plan to acquire more stores in California? Maybe you can also expand why or why not.
Right now, we don't plan to acquire another store in California unless the opportunity presented it to ourselves and it was too good to turn down. We think that we'd like to just continue to run the store profitably, have a good model that if there was an opportunity to acquire a store, most likely a distressed store, that we could basically take our team, our processes, our methodologies, and our technology into that store, turn it around and add it to the portfolio. But as of right now, we're not looking at anything specifically.
Okay. Financings. How much of the financings or the proposed financings can be acquired through debt?
It's a great question. We always like to start with debt because it's your cheapest form of financing and it's non-dilutive, right? So we're exploring a couple of different financing options right now that are on a pure debt basis or maybe on an asset-backed basis, on a rev share basis, but it doesn't preclude us from looking at convertible debt or equity as well. The thing I like to remind shareholders and investors is that when we unwound the merger with ACC Enterprises last year, I did take over 18 million shares back into Treasury. So we've got a little bit of an issuance to go forward if we ever did want to issue shares in a non-dilutive fashion. I'm very sensitive to dilution, but at the same time, we want to do M&A deals, right? So M&A sometimes has a cash component, sometimes has a shares component, sometimes has a combination. We're going to be entirely flexible on what we're going to do. Is we're going to do the best deal possible for the business. We don't want to pay high interest rates. We don't want to have any type of callable debt features, but we do want to basically maximize our ability to consolidate on a small scale basis and then probably look at a larger MSO coming in to look at a very profitable business going forward.
Okay, I think this is a good segue to our next question. Can you please talk about your balance sheet and current debt levels?
Yeah, so the balance sheet again is something that I actually have a slide here, and I think I'm still sharing. Is that correct, Sid?
Yes, yes, Eric, go ahead.
So if I was to look at basically our debt summary, and if you look at the $6.1 million debt forecast with the sale of, basically getting out of Canada, we have some non-operational cash inflows totaling about $4.6 million. So we've cleaned up our balance sheet by, basically getting rid of as much debt as possible. And then because we have some of these, we sold our license for $1.5 million. We've got a bond coming back from the city of Las Vegas. If we do sell our land, that's about another $700,000 there. We've got a vendor take back that's coming to us in the middle of the summer. So I like to tell people that, this is a very manageable debt summary here. If we had 6.1 million in debt, but I could bring in $4.6 million before I generated any revenue, we've got a fairly low debt profile. So this is something that we've put on our website. We've communicated to the market that we're going to continue to clean up the balance sheet. It's not to say that we're always, that we're shooting for debt free, but very, we're able to service our debt. We're lowering it all the time. And again, when somebody comes to have a look at us, I want to have a very clean balance sheet and a very low debt profile.
Yeah, I guess you can also talk about the assets you have held for sale. There's also a question regarding that. Was the Celista property in BC sold, and was the 2 million loan paid off?
So Celista, we have a memorandum of understanding. We're working towards a definitive agreement right now. We've got some excellent partners in that that sale of that asset in Canada. We're hoping to close on this in the next 3 to 4 weeks. I think that this is going to be a fundamental thing to say to the market that that's going to be a great group of operators in Canada. We're withdrawing from Canada. We just want to focus on the US. So we're very confident in the divestiture of the Celista asset. And in terms of the $2 million asset-backed loan that we took in late last year, no, we have not repaid that back. But again, it's a very friendly loan on very friendly terms, and we're servicing that debt every month. So,
okay, back to California. If you move into delivery, would that be organic, or would you buy an existing service that has e-commerce built in?
We already have a delivery license that we've really not been taking advantage of in California. So we're basically looking at, when the resorts, when the wellness spas, when the resorts, when the golfers come back, when the people come back for Coachella Music Festival, to visit Joshua Tree, we want to be able to present ourselves online so they can, they can already go on to Weed Maps and look at the menu. We want to have that capability in-house on an e-commerce site. And then we want to have that delivery option as well too. So we've already got the license. It's an asset that's just sitting there collecting dust, where we hope to make it operational. And again, some big plans that way, because we really think that when tourism returns to the Coachella Valley, people are still going to be a little bit gun shy about, mingling out there in the social circles. So the ability to order online, have it delivered to your Airbnb, your resort, your wellness spa, Joshua Tree, Coachella, we're really focusing on that. So this is an exciting time to basically get that off and running.
Okay, so there's 2 more questions left. There are a bunch of questions regarding your outlook on the share price. I will let that go. And there are also some questions on your guidance. You mentioned you don't provide guidance, but maybe I'll ask one of them. Were you able to stay profitable in Q1? I don't know if you can answer that, Eric, but go ahead.
Well, we're about to post our Q1 numbers, and we're just finalizing all of the MD&A and audit review questions right now. We hope to have that out in the next week, to be honest with you. I'm happy to report that our revenues are higher than we thought that they would be for Q1. Just give me a few more days on the profitability question, because again, we, like most US operators, we're sort of tied by the excise taxes. 280E, which is very punitive, relative to cost of goods sold and the ability to write that off. Everybody uses the term positive adjusted EBITDA as opposed to positive EBITDA or cash flow positive. Just let me get back to you on that, because again, from our perspective, we don't want to bleed cash, which is very much a typical thing in any of the legal cannabis industries. But I think that we've got the cash management under control. So I'm feeling very good about our bottom line, feeling extremely good about our top line. And if you can just give me another week, we'll actually have those posted.
Okay, we'll take one more. Flower prices in Nevada are great. Does that extend into other products like edibles and concentrate? Is that why you announced all those new brands and products recently?
Yeah, great question. So the answer is yes, but you have to almost do a business case on a product by product basis. So we've actually got some good data, some financial data on our concentrates. So the concentrates such as diamonds, sauce, butters, batters, the dabbable sort of consumable there is a very good margin product. And that's why we invested a little bit more money to get the lab back and operational. Once you start getting into edibles, it starts to get a little bit more cloudy, lots of competition, lots of different brands. So less excited about specifically, say, beverages. I do not see us going into beverages. I think it's just too cloudy of a space. But getting into other types of brands, we've got a brand for kind of a value B grade type flower. We don't produce a lot of B grade. Again, most of it's A grade, but we've got a sort of a value brand coming out called Surfer, and you'll see that. And then we've got a vape pen called the Weekender, which is really a disposable vape cartridge that is intended for the tourist coming into Las Vegas that is only going to be there for 3, 4, 5 nights, and they don't want to have something that they're going to throw away at the end of it. So it's a nice mellow experience. They can feel good that they've got, a disposable product in their pocket, throughout their stay. They can discard it before getting on the plane, and it'll be priced accordingly. We're looking at a few other types of CBD infused products, because through our relationship with Allied Health, they actually grow outdoors in Colombia, and they can export their CBD only isolates and distillates into Nevada. We probably have a deal with them coming where we're going to take our THC distillate, take their CBD distillate, combine them into maybe a tincture or some form of a wellness product. And that's an exciting thing as well too. So you'll see more brands, more products from us over time. But really the flow right now is Fiore for the top shelf flower, Diamante for the top shelf concentrates. And I'm very excited. We've got a very famous artist collaboration that's going to be coming down the pipes here as well, where we will be providing the flower to this very famous person as they launch in Nevada. Can't wait to share that news with you guys. But we were selected, relative to all the other cultivators in the state, because we grow organically, we grow high THC strains, and we grow high terpene profile strains where you've got good moisture content, good flavor profiles, and a good user experience. So we are very excited to be awarded that. We should be able to talk about that in the next 3 to 4 weeks. And again, we're just going to try to maximize on the top shelf type of products going forward.
Okay, let's make this the final question. Is there an US exchange listing planned? And I know Fiore is on the OTC. I guess the question is, are you planning for a senior exchange? Is that, yeah, but that'll be based on, yes, US federal legalization.
Yeah, that's it. That's a great question. If I was looking into my glass ball here, there's a reason that the big US MSOs are traded on the Canadian Securities Exchange. True Leaf, Curaleaf, Cresco, GTI, Harvest. You cannot be listed on the NASDAQ and touch the plant in the United States right now. So that is a fundamental, that the reason that we need legalization, or at least decriminalization. We need the Safe Banking Act, and we need the MORE Act, so that federally cannabis is descheduled. It's no longer a Schedule I narcotic. And that would allow all those big US MSOs to come down to the NASDAQ, the New York Stock Exchange. We think that creates an event for Fiore, whereby, if you look at the company I point to is Sundial Growers, who's a Canadian operator, but they are listed on the NASDAQ. They do 2 million plus share volumes every day. I've seen them spike over 2 billion shares traded in a single day. And that's the type of playing field that the large US MSOs are waiting for with this legalization. So what I would predict is that if the US marches towards the MORE Act, the Safe Banking Act, they repeal 280E, they allow the big guys to come down to the New York Stock Exchange and the NASDAQ, I don't even think that we'd have to do a redomiciling or an uplisting to the NASDAQ. I think we might get gobbled into one of those large US MSOs. That would be a liquidity event because we, I've increased our volume, probably doubled, close to tripled our average daily volume on the CSE, but we need the bigger playing field. And so that's, I think, what the opportunity is going to be for us, is to present ourselves as a profitable, high margin, high quality grower, a craft grower, if you will, and a very good operator at the retail level. And I think one of the large US MSOs, they'll uplist to the NASDAQ and they'll bring us along with them.
Okay, that was great, Erik. I don't see any more questions. I want to thank you so much for taking time to spend time with us and giving us more insights on your initiatives for this year. And I also want to thank everyone who joined the call. If you're watching a recording of this, also thank you for taking time. As mentioned, recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to a member of our platform, researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see all of our top picks. Thanks again, and wish you all the best and stay safe.
Thanks, everyone.